Good morning, everyone. Today is the 12th of December. This is the Plan Your Trade video. We are looking at a breakaway pattern today in carryover mode. Yesterday's flat down didn't really show up. We had a big move yesterday. You can see it here. So take a look at the daily. You can see we had a pretty solid move to the upside yesterday. Really, I mean, it was up a little under 1%, nothing huge. We're still looking at this excess phase peak pattern. Today, we get a breakaway pattern. Going to be very interesting to see how this plays out and how whether or not we get a downward trend here. I mean, at this point, I can be straight up honest with you, which is what I always try to do. And remember, there are tools available to help you identify these trends that are available. Check my profile, and we're looking at this top level. Let me draw a regular line. So we're looking at this peak right here as our kind of a last level of defense before we attempt to move higher. Now, the markets want to move higher. So remember, the anomaly event is kind of a reversion event. If it takes place, we'll probably see this 586, 587, 588 area. If it doesn't take place, then remember, we're probably going to be seeing this market continue to melt up. And I had targeted about 613. You can see the levels over here. 613 up here as kind of an upper target. This was a level that I predicted many months ago. I'd have to go back and find the video, but we've hit the level. We've hit the 608. We're coming up potentially the 613, 612 level. We've run into 100% measured move up into this area, and we are currently setting up a little excess phase peak pattern. Now, this excess phase peak pattern really could be kind of a mind-blowing setup here going into the end of the year. If this excess phase peak pattern, which you're seeing here, this peak rolling down into sideways flagging, if this reverses downward today on a breakaway pattern, we would be looking at targeting these lows down here, 602, 603, potentially even lower, essentially breaking away. Now, I'm not sure that that's actually going to happen. It would be, in my opinion, some sort of a news event or some sort of reversion into this downward channel. But then we get the potential for a breakdown. If by chance we get a breakaway to the upside, then we're going to be looking at, the 609, 610 area as a potential move, and then an ultimate potential rally up here in about 613. And that would be kind of our upper channel, I believe, for this move. So we're really looking at, long above this level and short down here below this level, which is the flag low. So there you go. So this is kind of our long level. And let me make that a little darker. So you can see we're getting into kind of a sideways ranging scenario with the excess phase peak pattern. And the reason I keep teaching you these same constructs over and over again is that, the excess phase peak pattern is critical to your understanding of how to trade on your own. Now, intraday, remember, I'm giving you these daily patterns here as a potential guide to help you understand what's likely to happen. Then you've got to come back down to the intraday triggers. So, in reality, I come back over here, SILJ is something I'm watching, and look at this already taking off. But you come back here to the SPY, and yeah, I've got some lines on here. I don't necessarily care. I just wanted a flat chart to show you. So you come back over here and you start taking a look at these, and there's tools that you can use. Where did we get our flat down pattern yesterday? Well, we really didn't. And you can use some basic tools like Bollinger Bands. Okay, Bollinger Band. Let's see it. Put it on. Nope, that's not the strategy I wanted. Bollinger Bands. There we go. We can put in something like Stoke of RSI. So you can put in, scenarios of different types of indicators to help you understand the strength of the actual market trends. You can see these indicators provided a very clear upward trend here into this peaking area, and it'll help you trade a bit more efficiently than just relying on, the SPY cycle patterns. Sometimes the cycle patterns are perfect, sometimes they're not. And what you need to be able to do is take the knowledge and understand that, a flat down pattern should have rolled yesterday into this type of a mode throughout the day. It didn't happen. So you need to be able to understand that, we had this good solid bullish trend. We had confirmation of the bullish trend reaching a peak up here in this area. And then it rolls into the sell signal here on the stochastics of RSI rolling downward. So you can see here that we're getting this rolling pattern. And again, it's not always perfect, but it's designed to teach you what is coming. So at this point, we have the excess phase peak pattern. We have the new high. We've rolled off of that high. Got a little bit of a lower high yesterday. We would need to see it roll downward. I think there's probably a 65% chance we roll downward today. We're at 606.16 right now, off 21.21%. If we get the breakaway to the downside, like I said, I would suspect that, this area here is going to be our target area. And that would mean that we would be looking at a potential confirmation of the excess phase peak pattern moving down below this area, which means we would come down potentially into this area, set up consolidation. There is no other real support in this range. I mean, there's very little unique lows or standout lows through this pullback. So it would make sense that we would either see something along the 50% type retracement area in this area, or a full retracement down to these lows here, setting up the sideways consolidation pattern. So be aware that, we could get a pretty solid breakdown, and a simple technique for you to use, like I said, is just, Bollinger Bands and stochastics of RSI, just a very simple intraday setup to help you trade. Okay, so now let's come back here to the QQQ. And we're look at this breakaway to a new high, invalidated the excess phase peak pattern. Let's see where we're at here. This is daily. Get rid of these. And this is, again, kind of the same move we would be looking for in the SPY. See this big breakaway, this pullback, and then we get this breakaway. Same thing here, pullback, breakaway. These are big, what are called anchor bars. So you get this big anchor bar here, indicating we're in an upward trend. Let's come back here, see where we're at. We're at new highs. So again, we have a breakaway bar. We are slightly lower today. We could get this pullback down into this gapping window, which we left open. So again, could very easily get a continuation of a pullback down into this area, maybe down into about the 50% area here. And again, if the anomaly event happens, like I said, it would be driven typically by some event, a banking event or a war. There's been a lot of events going on, but the strength in the U.S. markets is just really undeniable at this point. So you do not want to try to fight this long trend until we get some confirmation that there is going to be a breakdown or that it started. And that's the bottom line. You don't want to really stand in front of the train trying to get it to change directions. Hedging against risk right now would be pretty smart. Buying a put option maybe or two to hedge against downside risk, carrying that out to, maybe end of February or middle of February, giving yourself about a 60-day window, setting a strike price maybe down in this 509, 508 area, maybe even down here in this 500 area. That might be pretty smart simply because you could continue to trade long all day long, knowing that you had some protection to the downside if the market breaks downward. But it certainly at this point looks like the markets just want to rally. Okay. We are very overbought. As I showed you last time, let me see if I have it up. I do not. So let me find it here. As of last Friday, this is some of my data. Extremely overbought on the volatility index. We are weakening here with the fear index starting to elevate a little bit. Sentiment index is fairly flat, maybe a little bit higher this as of this week. Innovation index is skyrocketing, giving you some real opportunity to the upside. Let me come back over here. Gold trend index is pulling back. Now it would likely be moving higher off the move in gold. This was a good solid pullback after reaching almost a double. So this is basically a 1.618, 1.75 extension. Very solid pullback. And now we're into rally mode. I'm going to get to gold here in a minute. We're moving into this weakening trend here. As of today, we're probably up a little higher. And the smart money index, this weakening trend means we could be rolling into a consolidation period like this, like we saw just right here. And again, the smart money index was showing that the US dollar demand was weakening. I expect it to kind of stay up in this area and then eventually break down. We'll see how that is. And let's see, the QQQ valuation index stalling out a bit last week. You see, we had this peak into September, August, September, October, fell back down, stalled, and now it looks like we're going to get some sort of a breakdown move. Okay. So this is showing you the valuations indicating that, traders really rallied up into the election and then kind of decreased the position size before the election, bought back in a little bit on expectations the market was going to go up, and then rolled back downward. But again, we're getting this, the leading index is what I'm looking for. Let me find it. That looks like it. Yep. So you see the leading index, which is again, these are my custom indicators, is flatlining in kind of a downtrend. This is weekly. And because of that, like I said, I get the impression that we're moving into a moderate downward trend. Okay. Until we see this turn around and start to climb upward, then this becomes a real concern for me because this is very overbought. And like I said, this is where we typically get those pretty big pullbacks take place. When we get up into these upper levels, we could see a pretty sharp pullback take place. Okay. That's why I've been telling you guys to stay cautious. It's still bullish, but we could get a very big pullback. Okay. Now let's go over to gold and silver. Gold and silver are making a pretty big move. We're looking at, we're looking at a wrong direction, a bottom pattern in counter trend mode for gold. Could be a topping pattern setting up. We would likely then see some sort of a move like this. moving maybe up into this 27, 70, 80 and coming back down. That would be an essential kind of a topping pattern setup. Silver, as you can see, got above a little bit yesterday, got above $33 and then has rolled back down. And the topping pattern may actually have already taken place here. So you can see this move about 2760. This is a 4-hour chart. Same thing here. Silver has moved from the flagging formation up into the area that I suspected, moving into this consolidation period. We're looking again at kind of this volatility mode here. I do believe that a pullback is going to happen a bit here in gold, but I want you to understand that we have a pretty good move taking place. So let me come over here and show you some of my algos caught this move yesterday. You can see here, this is my TT scanner algo running on a 5-minute chart. Caught GDX long early in the morning, hit two targets, was up 1.5%. Caught silver long. This was fairly early in the morning, caught it at 10 o'clock, was up over 0.5%. Again, probably hit the targets near the end of the day. These were taken earlier to highlight the metal sectors were moving. GDX long hit both targets up 1.54, and Nugget long at 10:05. Sorry, 10:50, and sorry, that's 10:05. I'll have to fix that. And was off 0.24. This was a brand new trigger, so this happens a little bit when you get into a brand new trigger. The first bar, can take a little. At any time during the trade, you can take a loss, but particularly with this algo, that first one or two bars can get you kind of rolling plus or minus until a trend actually continues. But it caught it here on the 5-minute, and it caught it here on the 60-minute, which was beautiful. Brand new trigger on GDXJ, up 0.59, brand new trigger on SILJ. This is all a 60-minute bar, so we had a lot of time to get some movement out of the price. And you can see Nugget up 3.72 already within 1 hour, 2 hours actually. Hit both targets, huge move, and GDX again within 2 hours caught a 1.69%. These are the types of triggers, the actionable trade triggers that algos provide. When you're doing the work on your own, you're coming over here trying to make decisions. That's where I was trying to show you over here to try to use something to help you make trade decisions. If you're not capable of making trade decisions, then practice. Practice makes perfect. And again, there's a lot of videos teaching you how to understand these and how to look at these and start making trade decisions. But algos provide a very solid, you can see here yesterday, SPY 60-minute long at 10 a.m., brand new trigger off a little bit. SOXL long yesterday, brand new trigger off a little bit. VOO long, brand new trigger off a little bit. This was roughly, I don't know the exact time, but I would assume, because these are new triggers, right around 10 a.m. So again, just after the markets opened at about 9:30. So understand, getting very solid breakaway triggers on this trending. And again, these are available to my subscribers. I just want to show you that we're getting good, solid swing trade long triggers. Okay, so for gold with this bottom setup in counter trend mode, kind of looking for a top. Like I mentioned to you, that's what we're looking at here is kind of a topping pattern. We could rally and move a bit higher, but really we're probably going to just stay consolidated in this area, especially if the dollar continues to move higher. Okay, lastly, we're going to come back over here to Bitcoin, which is up above $100,000 again. Crazy moves here with Bitcoin. Let's come back down here to 2 hours. So you can see the flagging formation I drew yesterday. You can see it rolling across this pattern. Well, where did it go? Went right back up to this upper channel area and stalled. Okay, so here we have this kind of a breakdown mode. So here we have the breakdown of the flag moving into consolidation here. Let me come over here and highlight this. This was in red. So we come from here, breaking down into consolidation, and then we've rallied back out of it. We've actually gotten above the flagging high briefly and then stalled. We then have this flagging here, which is continuing. So I will try to draw this again, coming back down here, flagging out in blue, and flagging out across here. And that is lining up with our big yellow consolidation flagging pattern. So at this point, we are flagging, potentially breaking out. If we get above this area here, the yellow area, we are going back long. And at this point, because of this flagging formation here, we would need to see a breakdown below this area. Let me try to draw these. I'll mark this in yellow, and I'll mark that in red. Okay, so what we have here, guys, is this is the pullback flagging where we broke the flag low right down in this area. Okay, so this is now our range, this yellow range here. And then we have this breakdown level here, which I drew yesterday. Theoretically, that is still valid, but ultimately we have this breakdown level down here. Okay, this is a level that's already been breached right here. This was our breakdown level of that flag low. We don't have really any other flagging formation. We do have a little move setting up right now. We come in here, we move up, we come back down, and now here we have a bit of a flag. Try to do this in some other light color, light purple, a little darker purple. And so that flagging formation right there now becomes our rolling potential topping pattern. So ideally, folks, like I said, we either get above this level here and rally, or we play off of this little low right over here in purple, and or break down. So I will move this up here. And there's our breakdown level. And that gives you an idea here of where we're at with this trend. Okay, we are continuing to consolidate. Now, personally, I think Bitcoin may have enough momentum in it to rally up to a new high. And if that's the case, then we're going to get a fairly big breakout to the upside with continuation, maybe up into this 106, 107, 108 area. But again, we have been consolidated within this range, multiple flagging patterns. And, really the big element here as we continue to set these new channeling levels comes down to breaking above this level or breaking below this level. Ultimately, those are the real levels that we need to be watching, what's called the ultimate high and low levels. While we're in this consolidated range in Bitcoin, we could see, quite a bit of rotation. It would not be much to see Bitcoin roll downward, take out this level here, 100,000, 149 or 150, and then roll all the way back down to this 94,700 level. It's absolutely nothing. It's within this consolidated flagging range. Could very well happen. If it did, it would qualify this type of a breakdown move, where with blue, we would qualify this breakdown into potential downward trending into consolidation, possibly down here. And that would be very realistic. Whereas if we broke above this channel and got above this high, which we technically already have, so this blue channel, well, it depends on where we call the blue channel, flagging here. So again, if we call the high up here, which I could, moving down into early consolidation here and then flagging, that would be legitimate. We're coming off this high plays a fairly important role. This is our ultimate high, but this is our secondary high. So when you look at this pattern here, you must understand that what we're really looking at with the blue trend right here is these are extensions of this rally phase from down here. Okay, we're set this high, and this is again Fibonacci price theory. Set this low, set this high very early off of this peak up here. This gives us that broad pullback and then flagging trend, and you can almost see that we're really just consolidated into a broad ranging. In fact, you can kind of see it here, kind of like this. We're set up in a broad ranging flag, kind of like that. We have yet to get above this ultimate high right here. I'll make it red. And because we have yet to get above this ultimate high and we're still in this kind of a flagging formation, we could very easily roll to the downside, breaking this low level here and end up taking out 72, 73,000. Or trying to reach that. Ultimately, we could rally above this level, this red level, 103,625, and establish a new higher high up at 110, 115, 120. But this range, because of the way it's set up, and because of the fact that we continue to channel within this move, let me move this to the back, basically gives us the scenario here, guys, where we are just channeling. We are flagging, we are channeling, we're setting up multiple excess phase peak patterns. And until we get a clear breakaway, as I mentioned here, either in this area, which is I've got these double arrows, or this area is our short-term breakdown. This is our long-term breakdown right over here. And then ultimately, like I said, we have to get above, come hell or high water, we have to get above this level at some point, no matter what. We have to get above that level or below this level at this point to move anywhere beyond this channel. If we cannot get above or beyond these levels right here or right here, then we're going to be trapped in this range. It's just that simple. It's a good range for trading. I mean, really solid. But it's just the fact that price is flagging, price is consolidating, price is setting up these excess phase peak patterns. And, this is consolidation that failed. We came back up, took out that high off of this flagging, almost took out this high, failed again, setting up another flag. We'll see how it plays out here. I'd guess that you probably have right now because of this pattern, about a 60-65% chance to the downside, 30 to 40% chance to the upside. If we get above this 102 roughly level, then it looks much more positive. But this rejection right over here to the downside indicates that, it's changing direction, failing to establish a new high above this high level here. that means that we are then going to attempt to roll downward and attempt to establish a new low. A new low at this point, given this current range, would be either right down in this area, 95,600 or 94,350. So, by my estimation, we're going to see this roll downward, guys. Okay, that's it. I'll go back over here a little bit long today, but remember, we're heading into Christmas. Got a lot of activity taking place. Make sure to get some. And remember, there's other tools out there that can help you. I'm showing these to you to show you that, there are, oops, my algos can be very powerful. When you look at these, like I said, this is 5 minutes. So these trades last, 10, 15, 20, 30, 40 minutes, maybe. But look at some of these numbers 1.55% in raw data, in raw trade. If this was an option trade, maybe 20, 30, 40%, maybe. Here you have SILJ, 0.48%, brand new trigger. We didn't even get a chance to see how much this played out, but it's already up 0.5%. GDXJ, 1.54%. Again, great trigger, especially for you options traders. And again, look at all these triggers. So, here we've got one that's already hit the target. Here we've got another that's hit a target. VOO hit both targets. You're getting some really great triggers over here. And the data, the markets are just waiting for you to be able to take actionable data on these. And that's part of what this is about, giving you a little bit of a key as to what could be happening. And then again, coming back over here and letting you come in here and apply the data. So we're looking at a breakdown. We're at 606.65, down just a little bit in the SPY. Like I said, prepare for potentially a little bit of a rolling downward pattern today. Okay, guys, talk to you later.